Who better to react to all of this than no other than Bill Perkins? He's the CEO and head trader of Skylar Capital Management, joining us live out of Houston today. And Bill, now that President Putin is making good on his threat to Poland and Bulgaria, I guess the question out there in the markets is, who's next? Hello to you.
It's easy for us to trade natural gas in the fundamentals. It's hard for us to trade Putin, but obviously the market has to take into account that possibly he shuts off gas to the EU if they do not pay in rubles. The EU has said that they are not going to pay in rubles, so we have kind of this standoff, and we're wondering to see how that resolves itself. I think the EU during the summer, or Northwest Europe during the summer, has a plan with lots of LNG coming in to refill storage, but that won't be enough flowing gas with storage gas and LNG during the winter. So it is a dicey market right now.
Bill, dicey is the right word. Ursula von der Leyen calling this gas blackmail, and it's clear, not a new narrative, but it is clear that Russia is weaponizing its energy supplies. How do you think other major purchasers of Russian crude like Germany and Italy are going to respond now?
Well, I saw a report that Italy's gas utility has set up a ruble account. So I don't know if there's some sort of cracking in the United Front or if that was an erroneous report. I think they're very nervous about the energy situation. Over many years, they've created a dependency, and they realized that was a strategic mistake on relying on Russia for so many of their BTUs. How this unravels is going to take some time, but right now we're in a hot box button panic mode where if Russia shuts off the gas, the oil, etc., that they're going to be scrambling this winter to maintain heating and also just maintain their economies.
You know, Bill, when you and I last spoke back in February, you gave me a great line when I asked you about pricing. You said, look, what's the price of power when the lights go out? And I think the answer to that question is really hard to determine at this point. But what do you think this current dynamic will mean for gas pricing? Obviously, we're seeing prices surge right now, but what's your own forward outlook here, particularly now that NS2 is DOA and Putin continues the saber rattling when it comes to cutting off European supply?
I think we have an extended period of elevated prices. A lot of people are focused on the front, and we can have catastrophic pricing this winter. But I think the Northwest Europe, the European Union, has decided they are not going to renew long-term contracts with Russia. That's going to put upward pressure on prices and international gas prices in the forward markets. It's going to put demands on investment in infrastructure globally in order to supply Northwest Europe with LNG, and is going to take some policy shifts for developing their own domestic supplies, which they have been loath to do. These transitions, are tough, very tough to get the timing right. They're prone to shocks, supply disruptions, and then oversupply situations where you have too much LNG, you don't have that much demand, and you don't have enough storage. So there's a lot of things to be worked out over the next couple of years. I would say expect an elevated price and lots of volatility for the next few years.
And, I guess someone like yourself looks at this market and they possibly also see opportunity, right, Bill? So what and how are you actually trading out there right now?
We're trading very cautiously. Right now, I would say that given where prices are right now and the flows of LNG to Northwest Europe, it's actually a bearish situation, barring the complete removal of Russian gas. But given that they've fired the first missile, if you will, in energy land against two European states, Poland and Bulgaria, saying we're not going to ship you gas, which is about a BCF a day, everybody else is on notice. And so those bearish bets are trimmed back. In the winter, all bets are off. Northwest Europe needs flowing gas, LNG, and storage in order to meet its demand, particularly in a cold winter. And without Russian gas, which is about 40% of their gas supply, right, of their demand for gas, it's really difficult to see how the market balances without running out of gas. So, We're quick and we're nimble right now. Slightly bearish in the front, constructive and bullish long term.
Yeah, it's like a 1-2 punch for the market, but still opportunities out there, I guess you could say, Bill. And look, before I let you go, I also wanted to ask you about your outlook for crude as well, because it seems the market is ultimately pricing two trajectories here. The first would be a potential full EU ban on Russian output, gradual Russian output at the same time, and of course the COVID situation that continues to play out in China. How do you see the oil market moving from this point on?
Yeah, we see concerns about a demand shock with the COVID situation in China, but we also have this full ban on Russian crude, Russian energy. But without the full ban, you know, the joke is like, when has the last central bank sanction been lifted? How long did they last? And the answer is no one knows. They've never been lifted. You have Iran, North Korea, Cuba, Venezuela. No one's ever seen those disappear. And if you look at what happened to Venezuela oil production after their sanctions, Russia is not too far behind. They're already starting to decline. So irrespective of a full ban, the fact that they can't service the wells, they can't drill for new wells, they don't have the technology, most of the technology and the drilling were foreigners that came in, there's a real problem with Russian production on a go-forward basis. So I would say that my outlook on crude is pretty bullish in the term. Into intermediate term with a COVID lockdown and or some other demand shock, that would be a transient effect. But the loss of Russian supply globally and those declines are very significant.
Yeah, and the conversation in the market is that, look, there's so few opportunities, perhaps even capacity to be able to make up for that lost Russian supply. But Bill, what probability do you actually give a full EU ban on Russian crude and fossil fuel imports at this point? Of course, these European countries are in a rock and a hard place here, but is that likely to happen?
I would doubt that they would purposely shoot themselves in the foot, particularly with natural gas. That is a much bigger problem to solve, but it seems that this ruble for gas situation may cause that to happen, and everybody gets to point their finger on who really broke the contract or not. It's like I said, it's really hard to trade Putin. But I would say that Northwest Europe would not voluntarily cut off all energy from Russia. They're cutting off what they think they can get away with. The coal, some bans on crude oil or et cetera are possible, but the complete energy ban I don't think is possible in the next 6 to 12 months.